Hello again. This lesson is going to focus on the action side of insurance. We look what to look for and how to purchase insurance. Now we are looking for term insurance simply because it's the simplest, it's the least complex and offers the maximum coverage. But there are other kinds of insurance too, Let's quickly see the other types. The endowment policy, money-back life insurance policy, the group life insurance and ULIP are other kinds. The endowment policy is simply a term insurance that gives a lump sum amount at the end of the maturity date. The money-back life insurance policy is simply an insurance which gives some money back to the policyholder on the maturity date. Group life insurance, as the name suggests, it covers a whole group. Now, this is generally taken up by employers to cover their employees. Each get a certificate as legal evidence of the insurance. ULIP, or the unit-linked insurance plan. Now, this is by far the most popular product in the insurance world. It is a term insurance plus the returns of the stock market. It basically combines the benefit of life insurance and some of that money is invested in stocks for a healthy return. Now, we would encourage you to explore all types of insurance. However, when you combine insurance with an investment, you're usually paying more. You would usually get a better deal if you purchase a term insurance and a mutual fund separately. Don't try to club the two. Buying insurance online is the cheapest way to go about. If you buy through an agent, you'll usually have to pay more. The internet, there is no middleman, and the savings are obviously passed on to us, to the customer. This is very similar to opening an account with a discount broker like RKSV versus an offline broker. The latter will always be more expensive. Now, there are some comparison websites you can use to find a good deal, and I'll show you how using one of the websites, but I would recommend you using all the comparison engines and finding the best possible deal. Websites will usually ask you to check your eligibility first. So let's click on that. In this comparison engine, it'll take a couple of your details and then calculate your insurance amount. So first, you put in where you live. Let's put in Mumbai. We'll put in we're a male. I'll put my age. Let's say put it at 30. And they'll also ask you the date and month. Fill that in. Press continue. We are salaried and put in do you smoke or chew tobacco. We'll put that as a no. And your total annual income, let's run with 6 lakh rupees a year. That's 50,000, which is what Raj also earns. And finally, we click check best premiums, and you'll, just like any other engine, you'll get all the other results in one single page. So you have HDFC Life here, which is 900 rupees monthly. The next one is Bajaj Allianz, that's 3,500 quarterly, and Reliance Life, which is annually. Now, since they're all different premiums, it makes sense to look at the cost per day. So you can see it's 30 rupees here. It's slightly higher at 39 here, 20 rupees even lower. And when you go down, it's 23. So you can compare the insurance by looking at the cost per day. Now, this is the premium over here. This is the claim settlement ratio. And this is, of course, the sum assured. And if you open the details, then you have something called product brochure and policy wordings. Now, don't be too worried about all this financial jargon. I want to explain policy wordings, premium and claim settlement ratio one by one. Let's start with premium. Insurance premiums can be paid yearly, quarterly, or monthly. It's always recommended you have an auto debit for the premium from your bank account. Now, this ensures you never forget to make the payments. You may discontinue making premium payments, in which case the insurance cover becomes null and void. Fine prints are the legal details of the insurance document. It makes sense to read it before committing to the insurance terms and conditions. This is referred to as policy wordings. The success ratio is also called the claim settlement ratio. Now, let's say you selected an insurance company and you're happy with the terms. How would you know if the company is good enough to make the payment to you when the time comes? The claim settlement ratio is an excellent way to gauge companies' payout for insurance claims. Now, obviously, the higher claim settlement, the better. A claim settlement ratio of 94% means out of 100 claims, 94 of them received the money. That's pretty damn good. As of February 2015, here are the top insurance companies with the highest claim settlement ratios. So what's a rider? Think of insurance as a family-size pizza. In this analogy, the extra toppings on the pizza is called the rider. Riders are additional benefits to the policyholder in case of a special situation. Now let's understand some of the riders. First, we have the critical illness rider. This rider is helpful if the insured is diagnosed with a critical illness during the tenure of the insurance. Now, the payment is made as a lump sum amount or in part payments, whichever is specified in the contract. Common critical illness covers is cancer, heart attack, kidney failure, paralytic stroke, or cardiac surgery. This is helpful if the policyholder does not have a very healthy lifestyle. It's accepted that the risk for critical illness is much lower among people who eat well and exercise regularly. The spouse insurance rider is exactly what it sounds like. The rider insures the spouse in the same insurance policy. This would be useful if you and your spouse both wanted insurance. This will make it one clean policy. The advantage is clearly simplicity. Then we have the accidental insurance. Now don't get too confused with this one. Your term insurance already covers accident by default since it covers demise. However, if the policyholder dies in lieu of an accident, his family is paid an additional amount. This would be useful for people who spend a lot of time traveling. Finally, we have the disability rider. Now, this rider pays an additional amount to the policyholder in case he becomes permanently or temporarily disabled. This is useful if someone spends a lot of time doing manual labor or works around places that involve heavy machinery. For example, a worker at a factory would find this rider very useful to him. So a rider is nothing but an add-on to the insurance policy, just like extra toppings on your pizza. Now this is today's action plan. If you do not have any insurance, calculate how much you need by projecting costs using the current expenses. Buy more insurance than is adequate to meet the requirements of your family. You can discontinue any insurance you feel is too expensive. Research insurance products online. It's cheaper, faster, and allows you to compare against other providers. I want you to list down all insurance you own and determine if the current life insurance cover is adequate. Use a Google Drive and share all your insurance-related and financial information with your family members. Write an email to yourself and all loved ones with the information to access this financial data. Great, we're all done with life insurance. Now in the next lesson, we're going to learn about health insurance. I'll see you then.